Sanjay Sethi, MD and CEO, Chalet Hotels, joining us this morning. Mr. Sethi, good to have you with us. Let's dive right in. Now, we know that the road to recovery is long and challenging when it comes to the hospitality space. Talk to us a little bit about, the kind of strategies you've implemented to mitigate the impact of the lockdown, how they've been working out for you, and perhaps where we stand currently.
Firstly, on the show, I hope all of you are well. Look, we are now in the 6th month of this pandemic here back in India, and clearly lots has been done. I won't dwell too much on the early part of the cycle where we largely focus on the health and well-being of our employees and our guests, and also ensuring that the cash flow situation was under control. I think since then, what we've been able to do is 2 or 3 things. One, try and capture as much of the special purpose group business that's available in the market. And I think we've been blessed by the fact that we've been able to capture the lion's share of that in every micro market that we're present in. As a result, our hotels have come out as leaders in those markets. That's one. Second was a very strong look at our cost structures. And on that front, while Chalet has historically been very efficient, I think we saw a large room, for further correction, especially in this environment with the business being low. Just to give you an overview, for example, I think our operating costs were brought down by 66%. A large percentage of them were fixed costs, and the variable costs obviously were quite low. We also worked with the government departments to reduce costs, whether they were your contract demand charges from the electricity department, whether they were excise fees. All of that was, we worked with them. Some of it has been done, some of it we await. And then we work with the brand partners. They have certain costs that they charge us. On that front, we've had significant relief from Marriott's and Accor to bring down our costs further. But that's all about cost. I think what we need to focus on now is the revival part of the business, and that's where we spend most of the last 2.5 months at. And that includes looking at the new revenue streams under the new normal scenario. On that front, I think F&B has been a focus area for us, and I think we've done extremely well over there. And we set up now a system which will ensure that the F&B part our experience on food and beverage is now available to our guests in the city seamlessly at their homes itself. The other area I think that we've been able to have a lot of success is in the small wedding business. Some of our hotels, which opened about 2.5 months back in Hyderabad and Bangalore, have done more weddings in the last 1.5 months than they've done the whole year last year. Smaller numbers, 50 to a wedding, but I think they've managed to get a lot of that. More importantly, I think, when we go back to our guests, and I was speaking to the head of Marriott's in India, and I said, listen, what's happening on the rate front? What are our corporates telling us on the rate front? And, the response that I got was quite amazing. He said all the corporates are saying, we are not going to negotiate rates with you downwards. All we want is for you to ensure health, safety, and the right protocols for our travelers. In fact, they've gone ahead and said, give us end-to-end solutions, right from the airport to the hotel and back to the airport, seamless by the hotel itself, which actually allows us to increase our revenues in some way or the other. We haven't seen pickup happening on the corporate travel side too much. A little bit here and there. We're getting some project-based business in some of our hotels in some of the cities, which is encouraging. The challenge is that in Mumbai, there's a cap of 33%. One of our hotels has been at 33% occupancy for the last 1 month. So we're not able to increase that. And as and when Mumbai, we get a chance to increase that cap, I think there's enough business to be taken.
All right, Mr. Sethi, that helps because it really gives us the overall context. Before I get to some operational numbers, I also want to understand, given the kind of pain we've seen for the industry, there hasn't been any move by the government to really address this practically. There has been some talk and some acknowledgement, but no actual action. Is that something the industry has now moved past, or are you still hoping that there will be some relief on that end?
So we do expect some relief from the state governments, for example. A lot of the operating costs are connected with the state government fees and charges. whether the excise, electricity, property tax, etc. So we do expect, and we continue to engage with the state governments in the respective areas to try and get some sort of relief on that front. The central government, I think, has a smaller role to play. I think from their side, we expect more of an help in opening out the economy and the country and the ability to travel more. So, for example, we'd like to see the central government, the Ministry of Tourism promoting India as a safe destination, because you've got to get that confidence of travelers back. The challenge in our cycle of travel is more on the aircraft side than on the hotel side, because in a hotel, you're relatively safe because you're isolated in your room, which has been sanitized, especially in the higher-end hotels, properly. So from that perspective, I think we expect state government to help us and promote Brand India. From the central governments, state governments, we expect help on some of the cost reliefs. And as you know, the RBI is already taking steps towards the one-time restructuring, whilst at Chalet, we are unlikely to need that one-time restructuring. But there are enough companies, hotel individual owners in the country which need that relief. So I think if we can get prioritized under that scheme for our industry, it will help a lot of the hotel community. At Chalet, as I said, we didn't take the moratorium, both the options of moratorium, we gave it a pass. We didn't see the need for it. From the one-time restructuring, once we look at the finer print as it comes out, given that we have a pretty steady revenue stream coming out of our office assets, in addition to doing comparatively well on the hospitality side, that combined together gives us enough comfort to get the sense that we may not need this one-time restructuring.
Mr. Sethi, hi there. Good morning. Avan joining in. Interesting, really, that you've spoken about some of these new revenue streams, and who'd have thought that small weddings as well have been doing quite well in, the South. But let's talk those operational metrics as well. The RevPAR has declined quite significantly in Q1. So what have been the trends for your occupancy or ARRs over the past few months, and what would be the outlook? Do you think that retail commercial, which has been driving growth, is likely to continue to do well in terms of the rentals and how they've performed?
So, our retail commercial contributed roughly around 21 crores of revenue, and the hospitality division contributed 31 crores of revenue out of a total of 59 crores. But the trends has been a sharpward curve upward for hospitality. And I think that's going to be 85% of our business when we normalize. It was the case pre-COVID. And, it'll take some time. You're not going to get there in a hurry for sure. But we do see some traction happening post-Diwali on the corporate travel. And we see maybe normalization end of next calendar year or the last quarter of next calendar year, which is Q3 next financial year. Just to give you a sense of the trend, since you inquired about that, we noticed an interesting trend that our RevPAR grew over a 2-month period by 46%, which is comparing June to the month of April. So whilst occupancies grew from 17 to 33%, the ADR had a marginal growth resulting in RevPAR growing by 46% over that 60-day period. Also, an interesting thing is that whilst we had 17% in April and 33% in June, that's on the base of the whole portfolio. If I was to trim it down to the operating hotels only, and 2 of our hotels were not operating, our occupancies were 20% in June, 25% in May, and 38% in the month of July. Now, 38% is not necessarily a very bad occupancy given the environment. As you know, the only country that is now showing some strong signs of recovery is China. And China hit 60% occupancies in the month of July, which gives us an indication. If we were to take a lag of 3 or 4 months, I think it'll be a fair comparison to think that India could potentially reach there in 3 or 4 months from now.
Mr. Sethi, would have loved to chat with you much longer, but I'm afraid we're completely out of time. But thanks so much for giving us a lot more clarity on your business, how things are shaping up for the hospitality industry, and the relief measures that are sought after.